Our second hot inflation report of the week has the market scrambling. Are we going to see more rate hikes? What is going on with inflation in the U.S.? That and much more today on Money Never Sleeps. Welcome back, everyone. Thanks for wrapping up your week with us. Before we get going, do us a favor. Hit that like button. If you haven't yet, subscribe to our channel. Nothing Kevin or I say is financial advice, so please do your own research. Before we make any buys or sells, Kev, closing out the week, past the midway point of the month, we had Coinbase earnings yesterday. That stock is pumping today on the back of those, up over 11%. Meanwhile, crypto down a little bit on the daily. Nothing crazy there. We got a holiday on Monday, so markets are kind of getting ready to close up for the next few days. What's got your attention right now? Where are you focused?
I'm all over the place, man. I'm looking at, excuse me, I'm looking all over. Obviously, the semiconductors and AI stuff's been really interesting to me. I also think that there's a good chance that we may have found out when the AI bubble might pop. So now this is speculation, right? And I'll just get into it right now because it's really important.
Rampant speculation, but let's go with it.
Rampant, yeah, sure. That's why we're also seeing supercomputers eating shit today after people got stupid with a little bit of leverage. But I think what we're seeing here is, I'll pull up the supercomputer. I don't even know what it's called. It's SMCI. It's a dumb name.
Super microcomputers.
It's a dumb name for a stock that's down 18, almost 19% today. But if we could look at the candle just on today, let me zoom in here. Look at that. Whew.
That is
fill that gap. Fill that gap. It's it ain't pretty, right?
No.
So
no, it's not.
I'm going to zoom out real quick. I'm going to kind of show everyone kind of my rationale. So I made this chart yesterday. You can go on Twitter and see it. But this is kind of where we are right now. All of it right here is all leverage. This is everything that people are borrowing from banks, corporations, anywhere where they can get money to buy in and put it into a stock, right? That's why we're seeing this mania top. And, I'll talk a little bit about what George Gammon also said in a video a few days ago, where he talked about how trading has changed from the 80s, because now everyone kind of has the ability to buy, but no one really wants to sell ever, right? It's not like we're putting our money with hedge funds or anything like that, where they're buying undervalued stocks and selling overvalued ones, where it kind of meets in the middle. Now everyone's kind of like, well, I'm okay with this 10% or so every year, gain. And we start to see that a lot of people are just piling money into the system. And we start seeing that there's a lot of leverage, because the most overvalued stocks tend to be the ones that continue to perform the best. I mean, this is no different, right? Look how much that stock has gone up significantly. But the problem is, at some point, the leverage is going to run out. And we know where the leverage is coming from. A lot of it's coming from the banking system. People are saying, well, they're borrowing at a high interest rate. But guess what? If they're borrowing at a high interest rate, but they put into something like this, which for the past, few weeks has been, generating, I think, like 200%. If I look at this on the monthly, let's see. If I go straight on the monthly, no, it's 53%, 86% last month. But regardless, that's more than the 5% or so that they're borrowing from the banks with that leverage. So yeah, sure, they'll borrow. It doesn't matter if the rates are high right now. They'll continue to do it. But at some point, this leverage is going to go away. Right? There's going to be a point where the banks are like, the risks in the system are too much for what we're dealing with. We got banks that are collapsing. We got commercial real estate that's showing us that maybe we should be putting a little bit more cash on the side just in case that some of those loans go bad. We also know that the bank term funding program and liquidity facilities are ending. Also, yesterday, we got news that the reverse repo dropped under $500 billion for the first time in a long time. So we're seeing that a lot of money is leaving the system, right? And you're seeing these mania tops, these straight lines straight up and down, and people are buying into the top. At some point, that leverage is going to go away. And when that leverage goes away, you're going to see what we're seeing today. And again, I don't know if that's necessarily why it's selling off today. We can't be sure just yet. But we're seeing this sell off to the point where it's almost 20% down. And there's no support built here on the way up. Therefore, there's no support that's being tested on the way down. We have to go all the way down to probably $357 before we want to see any type of meaningful support that's been built on this, right? I'm very cautious to see what happens over the next few weeks, because we know that the banks are the problem. The banks and AI and semiconductors are all interconnected right now. So I think that if the banks have any problems, the tech bubble is probably going to burst with them. That's just one theory I have. I'm seeing it kind of makes sense what we're going through right now. And we'll talk about vendor lending and vendor loans in a little bit. But right now, when I see this, I'm very, very sure to the point where I'm not saying it's going to happen for sure, but I'm definitely more in tune with this being like 80 to 20%. This is kind of what's going to happen with the AI bubble, that the banks are going to go bust or they're just not going to loan any more money out. And we're going to see these collapses drop significantly super fast because 20% in one day, there's a lot of people out there that are probably hurting buying this fucking shit this morning when it was above $1,000.
Oof. Yeah, that is not an ideal situation. Godspeed there, unless you got a short on that one, in which case, good luck, enjoy making that money, I suppose. All right. We had another inflation report today. It was producer price index, and that number came in hot monthly, year over year, core year over year. So, we have a lot of people who are going to this narrative of inflation is on the rise again. The Fed has to raise rates. I know that you disagree with that. Give me your case for deflation, your rationale behind it, and what you think comes next, Kev.
All right. So I don't think we can judge anything off of 1 month's worth of data, right? A lot of what came from that inflation print was a lot having to do with energy. We know that there's been issues with energy in the past few, weeks to months. If we get an inflation print that's that hot, given what we are seeing with the consumers, what we've seen with retail sales, what we're seeing with some of the earnings that Hasbro had when it comes to discretionary spending, it shows you that the economy is slowing down. I'm actually pulling up right now retail sales. I was trying to fix it on my one chart, but we'll pull up the retail trade, and it just shows you kind of what's happening in the percentage change of what we're seeing across the board. But I am not convinced one bit that we're seeing stagflation or inflation picking up, because I think that the demand is dropping significantly, right? So going into the holiday season, we see that we were down 0.33% in October. November actually got revised down. November originally was up, but now we got revised down when we got the retail sales, for the month of January. So it was negative 0.23. December was 0.43, and everyone was talking about this wonderful holiday season. That actually got pulled down a little bit too, right? Everyone was saying, this is one of the best holiday seasons we've ever seen. Oh, yeah, fuck you for lying. Then we look at where we are today with January, and we just fell off an absolute cliff. So that tells me that consumers are not spending. So you can raise the prices, sure, 100%. That could be reflected in the data for the CPI and PCE and people saying that everything's going up in price. Doesn't mean that the demand's going to go up there to meet it. So I think that's the key thing here. And if we continue to see the job market be kind of, start to weaken to the point where people are starting to get laid off more, and when the data is actually starting to reflect it, you're probably not looking at stagflation or anything like that. I think that we're probably going to see a lot of the issues being probably liquidity in the system is just going to dry up, and people are going to scramble. And the best way to, save capital and pay off your debts is to cut costs. And that's probably going to be unemployed, lay people off, and then try and sell whatever goods you have on hand. And that's probably going to meet demand somewhere a lot lower. So it's kind of a shitty situation, but it's not necessarily stagflation just yet. And it definitely isn't inflation. We've seen 1 month of higher prices. We have to see demand meet that. I would be surprised if we continue to see hot CPI prints for the next 2 to 3 months. Maybe one more month we get kind of hot because of all the issues with oil and production and stuff like that. But I'm not convinced one bit. This retail data and everything that's came out this week has been absolute shit. So I think that the markets aren't pricing that in also. So just add that. I think that's kind of where we are sitting.
Yeah, speaking of pricing things in, when it comes to the rates moving forward as a result of this print, nothing changed for the March meeting. It's still 90% that there is no movement in the rate. The probability for May increase that they keep the rates here as well. So we're starting to see the markets believing that, hey, if this is happening, we're not going to be cutting until June, July. We'll see about all that. Let's talk about Coinbase for a second here, because that's been a big talk in crypto. Earnings came out yesterday. Profitable quarter for the first time in 2 years. I got the numbers in front of me. Let me get to them right now. Let's see here. Revenue was $905 million in Q4. It's up about 50% from the previous year. Big part of this, once again, comes back to the Bitcoin ETF. A renewed interest in crypto led to higher fees, more revenue, and that was due primarily to the belief that the Bitcoin ETF is going to be positive for the price action of that. could signal that we get the ETH ETF sooner than later. And we see on the chart here that Kevin has pulled up, 11% up on the day, just over $18 a share, starting to come down just a tick now, but at the highest price it's been at in quite a while. So you're seeing a bounce there. If you got into Bitcoin or to Coinbase at its lows last year, you're doing great right now. Will that momentum continue if we see, the excitement around the Bitcoin ETF slow down a bit? If we get more delays on the ETH ETF, remains to be seen. I know, Kevin, I'm sure you're skeptical about this one too, but give me your takeaways from looking at the Coinbase report and their earnings.
Sweet. Yeah. So I'm just going to give you a base case right now why I'm not concerned. This is where we need to pass in order for this entire structure to be invalidated, which is $208 or so. So if the price gets above that, then we can kind of be concerned about what's happening with Coinbase. Then maybe the structure isn't the 5 waves move that we're kind of seeing right now. And we probably wouldn't see a new low for Coinbase. However, we're at 183. It's kind of testing a huge level of resistance up here, especially if you look on the stochastic RSI. You can see that we're at the top. We're at 100. Actually, we can't even see it right there. We're at 195 right now. We've created all these gap ups in the weeks leading up to it. We also know that Kathy Wood recently just sold, I think, like $24 million worth of Coinbase stock right before the news came out. You have to be kind of an idiot to think that the earnings wouldn't be good with the ETF. That's all we fucking talked about for Q4. Everyone was buying the shit out of Coinbase and not Coinbase, but buying the shit out of Bitcoin. And, whether they buy or they sell on the exchange, the volumes are good and it's going to benefit them regardless. Right. So I think that this is in tandem with Bitcoin's price has kind of shot this up not artificially, but pretty fast to the point where it's like, maybe it's, look, from the bottom down here to where it is up here, all to the height, it went about 68, almost 69% in a short period of time. This is February 6th, and today is February 16th. So in 10 days, we've seen it shoot up that much, not even 10 trading days. It's a pretty impressive move in the market there. I don't necessarily buy it because I don't know, man. I'm waiting for if we pass this up here 208, then I'll reconsider. But for the time being, I still think that we're just on track for this 5-wave move to the downside. I still think we have that 40% move down for Bitcoin, which is coming. And again, that's just what happens in the halving years. We want to see that happen, but I think that if that does happen, we're probably going to see Coinbase tumble with it. It's really interesting though, because if we do see a massive sell-off on Coinbase, that's going to help them regardless, right? Because they're just getting that much transactional volume. People are going to be using the site. The problem is if nobody's using Coinbase. So it could be a really weird thing where maybe the bottom comes in after no one wants to touch crypto. But I don't necessarily see that right now. I think in a massive sell-off, they're still going to do pretty well if we look at some of those earnings just based off of volumes.
Yep. Okay. What else? Not much else to say on the Coinbase stuff there. Interesting.
Apple.
Yeah, let's go for it. Talk about Apple. Fire away. You can flood NVIDIA even more, Kevin. It doesn't matter because we're going to keep churning upwards despite all of your negativity. I've had enough of it, but go ahead. Let's talk about Apple.
I was going to praise you today, and maybe I'm going to take all those beautiful comments back about you, Jweb.
That's fine. I don't want it. Go ahead with Apple.
Whatever. I'm going to shit on Apple too, right? Because I'm going to take a big turd on Apple because Jim Cramer fucking loves the stock. However, I have problems with it, and I freaking called it. And again, this is the only time I'll gloat. I said that we were going to get the Apple Vision Pro, and then over the weekend we were going to get all the bad YouTube reviews. It took 2 weekends, but now everyone's reviewing the Apple Vision Pro. They hate it. They're returning it. They're saying that it's clunky. It's hard to deal with. Mark Zuckerberg says, "F you, Tim Apple," right? That's what Trump used to call him, Tim Apple. He said, Tim Apple, he quit cooking the books. These suck. I'm just kidding. He's not cooking the books, but he pretty much just called them out and saying that it's overvalued how much that product is, and it's not necessarily that great. But I'm looking at this, and after all the news that we got that Berkshire Hathaway also cut some of their Apple holdings, and then Apple says that they're going to compete with, I forget what it was, Microsoft or something like that with AI. Of course, they had to say AI to let it bounce yesterday. We're at a pretty critical level for Apple, and I think it's kind of fun where we are. So I'm going to pull up the head and shoulders pattern because you got maybe a left shoulder there, head up there, right shoulder there, and then we're currently sitting just above the 200 EMA on the daily. So what we could see going into maybe OPEX, maybe not February. Well, obviously it wouldn't be today's OPEX, but maybe OPEX for March. We could see a bit of a dump in Apple. I mean, we could probably break the 200 EMA because I don't necessarily know if we're going to find enough strength to push up to the 50 up around 187, especially if something. I mean, we're seeing a bit of a sell off right now in the equity markets for the indexes. I wouldn't be surprised if we go below that. So, I think Apple for the most part is, they introduced a product that people got hyped up about. Now people are kind of realizing that it kind of sucks. I think they're a great company in general, but I just don't necessarily know that they're going to be safe from what's coming. There's no reason necessarily why you should be bullish on Apple after the Vision Pro, right? It's kind of a buy the rumor, sell the news event. You're starting to see a lot of people exit the market for Apple, and you're at a pretty critical level. And this pattern seems pretty dangerous to be betting that it's going to go a lot higher. I'm not going to say what you should do with it. Just full disclosure, I do have Apple put on this for OPEX on March. So I'm interested in seeing this. That's why I kind of wanted to cover it as well. But it's just kind of interesting how we were up here back in December, and this pattern kind of played out in the month and a half or so after to get us to this point. So I'm really interested in seeing what Apple does here. I think it's kind of make or break, and this could be the sign that they're pretty much like Tesla and they're the next one to go in terms of the Mag 7. So interesting one to watch. Now, the other one I want to talk about is the one that Jweb has always talked nothing but sweet nothings about, Jensen Huang and everything. I don't necessarily.
If you besmirch the good name of Jensen Huang, we are gonna go to blows. I'm telling you that much. I'm gonna fly out to you. I'm gonna come over there. I'm gonna Will Smith you. All right, keep Jensen's name out of your mouth.
Oh man, poor Chris Rock. Let's do this. I'm not going to talk about Nvidia, but I'm going to talk about AI and semiconductors as a whole. So, have you ever heard of a company called Nortel?
Yes, I don't know much about them. I've heard the name.
Long time ago, right? Canadian telecom company. So what they did a long time ago, and they were just as big as Cisco, just as big as I forget what the other company was, starts with an L, but they right around the tech.com bubble, they were doing this thing called vendor loans. They're loaning money to their vendor or to people who are willing to buy them, buy their products, use their products for a discount, or just crediting them that everything that they're using would count on their earnings report. So I'm going to share my screen real quick. And I highlighted the section from this article that's actually from 2001. So it's about a year or so fresh after all the collapse of the telecom companies. But in the case of firms this investor had taken a stake in, meant increasingly generous financing terms like all of its peers, Nortel engages in vendor financing, which involves selling equipment on credit. It can also include what's working capital financing, whereby the lender also lends the customer funds with which to run its business. Actual and potential customers say Nortel's financing offers reached as high as 130%. Now, the interesting thing down here is when a vendor finance sale is made, the company is allowed to book the revenues as it would if the sale had been cash. I can't read right now. Accounts receivable and asset account on the balance sheet also are booked. The company periodically assesses how likely it is to collect its receivables, and when in doubt, it takes a charge by raising its provision. The provision, in other words, is a measure of the riskiness of the client. So now this is something that's really interesting because it's not illegal to do this, but it is fucking so dishonest if you're thinking about how we're looking at growth. So in other words, we're looking at a company, and this is the problem I've had with some of these companies, and I'll name Nvidia in this. I'm not saying that they're doing this to the point where it's illegal. I'm not at all, but it is questionable because when you look at their market cap compared to their revenue, $16 billion in revenue for a 1.8 trillion dollar company, numbers don't add up one bit. Right. That doesn't, and I'm not saying that it doesn't add up like it's the books are cooked. I'm saying that it doesn't add up in terms of, I think we're outstretched on our fantasy that this thing's going to keep going up forever. Right. And the problem is that when you're kind of in this system where you're looking at these numbers and the earnings and the expectations have to continue to grow, well, then you kind of lean into it. Right. So it's a very dangerous place right now. And that's why I was going to compliment you and say, you know what? I think you're doing something that no one else is doing. You're taking profit, which I think a lot of people confuse greed with intelligence. But the intelligent part of being greedy is when you do take profit because you actually have that capital in your hand. You're not going to lose it. You can always buy back into some of these companies, right? What a lot of people aren't seeing, though, is that we might be in a bit of a I wouldn't say not unethical, because at the end of the day, it is legal. It's a little bit of a tricky narrative that we're navigating when it comes to the growth of some of these companies. You can only grow so far. And I've always said this in the past, that there's a lot of these companies that have warehouses full of these chips, warehouses full of, these semiconductors. Nortel actually had warehouses of all their product that their clients had bought using credit, and that was pretty much just projecting, propelling their earnings up higher and higher to the point where one day they just dropped like 30%. So I'm not saying that that's going to happen to NVIDIA or any of these other AI companies, but I do think that we are going to find out in maybe a year or two, maybe 3 years, a lot of these practices were kind of being used. Now, if we want to go to NVIDIA now to see what it's doing, the reason why NVIDIA is not dropping like supercomputer micro penis, I don't know what the fuck that shit's called. I know, I'm sorry, I had to, but I have to, but
just keep going.
Hey, I didn't say anything bad about NVIDIA, okay? You should be happy about that. But look at this. The reason NVIDIA is not doing the same thing as supercomputer, whatever that thing is because earnings are Wednesday. And when that leverage, that liquidity that's still in the system hasn't drained yet. We know that. Bank Term Funding Program ends March 11th. What comes up March 12th? Well, no Bank Term Funding Program. And then also shares are unlocked for ARM, which is another company that you should be questioning. But we're seeing that it has a very similar growth pattern to what SMCI has. Hey, said it right this time. We have right here on the side all this leverage. Doesn't make sense, right? I mean, it makes sense. People are buying this, but this can only go on for so long. We have all this. We have earnings coming up, and those earnings come on, I think, Wednesday or so. And I think people's expectations are that this is going to go up. I mean, we keep seeing every bank just keep moving their target. I forget who it was. I think it was Bank of America. They said it was like 640. Next thing you know, they moved it to like 720. Now it's 840 or so for NVIDIA. And it keeps going that way. It can't forever. We know that the Bank Term Funding Program is ending, and we know that we are talking about a stock that is up significantly over the past year. Let's just pull this on the yearly. If we pull this up on the yearly, I mean, you can't tell me that this doesn't look reminiscent of what happened in 2000, right? This is a stock that's gone up only, has not retested anything since around $306. Now, am I saying NVIDIA is going to drop that after the earnings call? No, I don't think that it's going to drop like that after the earnings call. I think NVIDIA is going to drop when the banks drop. I mean, that's why I made that point earlier. So it's really interesting to see this chart compared to the other one, microcomputer. I don't know. I'm so bad at the fucking name. But it's interesting to see that because that could be foreshadowing to what we could see when there is no liquidity in the system. When there's no liquidity in the system, that's when, the monetary system calls bullshit on the equity markets and we start to see a big pullback. Now, the reason I kind of want to bring that up is because we're seeing all-time highs across every index, right? You know that the DAX is pretty much an all-time high right now, right? Yep, all-time high. The one that was interesting last night was the Nikkei. Nikkei hit all-time highs. It was first time since 1989. There it is, double top for the Nikkei, and we're looking at this right here, and the setup is the exact same. We know that where's the last one, Hang Seng. A lot of people are betting on the Hang Seng is also doing extremely well. But oh man, we didn't even play this. We got to do it real quick. You see what that is, Jweb?
What's that?
I got so caught up in the past.
Drop every time.
And that was the first time. That's a historic one too, just for China. First time that the Hang Seng has ever been in the death cross in history of its existence, right? And there's a lot of people down here that are speculating that everything's going to be okay. We got how many recessions did we get this week that were announced? 2, right? You got the UK and Japan.
Like a baker's dozen.
And then Germany, apparently, who's also in a recession, surpassed Japan because of what do you call it? I believe GDP. And now it's the US, China, Germany, and then Japan is the world's largest economies. Now, the best part about that is Japan and Germany are both in a recession. You don't need me to tell you what China's in. And the US is just chugging along just fine for what everyone believes, right? If people don't realize this, that the world economies are synchronized to the point when the monetary system decides to give in and it can't just produce as much cash as possible because there's no one that they can issue money to, that's when it all fails. It's a very dangerous game. But when we're looking at this here, I thought this was going to be an ABC correction. It looks like it's more like a WXYXZ corrective pattern, which is pretty much a rising wedge. I don't think that we're done with China. Even though everyone keeps saying that the market's going up, that this thing's going to turn around, I'm not convinced one bit, because when we look at what's going on in the world in terms of actual economics, people are not spending as much. We're seeing demand drop significantly. There's only a matter of time before that money just absolutely has to leave the equity market, because debts are being called up. We also know that leverage and margin are a problem too. So if things go south on someone real quick, that money could just disappear out of the system faster than you can, believe. So I'm looking at this across the board. I think the major indexes are in a pretty dangerous place. The S&P, obviously, and the Nasdaq and the Dow aren't seeing too much pain yet. I do think that when that leverage does go and the banks can't issue out any more loans, everyone's going to just sell faster than you can believe. And it could cause something that's 5 months or so of pain. I think it's going to last more than that. It's probably going to last a year. But I think that a lot of people that are betting on those inflation bets and hoping that we keep going for all-time highs are probably going to be in a bit of pain moving forward on that assessment. So there was one trade I was looking at, and I don't necessarily know if it's the greatest trade, but it's one that I'm considering, because I do think everyone is wrong when it comes to yields coming down. I think that the Fed is going to have to cut an emergency cut, and we're going to start seeing the yields drop significantly on treasury bonds. But I do think that the TLT, which is the 20-year plus treasury bond ETF, there's a good chance that this thing could fly if yields drop significantly, if rates are cut to zero, right? QE isn't what people expect. I think a lot of people are going to try and lock in those high yields, especially if there's a lot of uncertainty in the equity markets. They have to put their cash somewhere, especially if they're parking, millions, billions of dollars somewhere. Could be in bonds, and it's probably going to be at those high percentage rates where they can collect over a period of time. Just safe capital, easy money that's coming in. So this is one trade that I'm looking at. It's down a little bit here. I expect that PCE at the end of the month is probably going to send this down a little bit lower, considering how everyone's kind of afraid of inflation right now. But I do think that we are getting to a point where there is a good chance we could see the treasury yields start to revert back to zero. And that could be a good time for something like this. Again, I'm not invested in it yet. I'm going to be interested in finding maybe a good entry point. But I think that's kind of where we stand right now. I know I've kind of went through everything really fast, but that's kind of how wrapping up the week. We missed yesterday, so I just had to cover everything real quick.
No, I appreciate that. No, I appreciate you covering all of those. So that's going to wrap it up for today, for this week. It has been an interesting one, to say the least. We'll have a shortened week next week with President's Day on Monday. So, not as much there, but we should get some interesting data. We have NVIDIA earnings on Wednesday. We're moving closer to the end of the month in the next round of PCE. Kevin's waiting for this house of cards to tumble over. We'll see if we get any closer. But thank you, everybody, for joining us today. If you have not yet, hit that like button, subscribe to the channel, drop a comment. Have a great weekend. Stay safe out there. Go do something fun, and we'll see you next week.
Take care, everyone.